to the live room. It's the 1st of May. Happy May Day, guys, as such. Just to get the disclaimer out of the way, any advice or information given in the room is educational in nature and general advice only and does not take into account your personal circumstances. By viewing any material or using the information presented by Bovarius Capital, you agree that this is general educational material and will not hold any person or entity responsible for losses or damages resulting from the content or general advice provided here by Bovarius Capital Management, its employees, directors, or fellow members. Spot currency tradings have large potential rewards but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest into spot forex markets. Don't trade with money you can't afford to lose, guys. This is neither a solicitation nor offer to buy or sell spot forex or other financial products. No representation is being made that any account will or is likely to achieve profits or similar losses to those discussed in any of these sessions. A past performance of any trading system or methodology is not necessarily an indication of future results. The information is for purely educational uses only. Right, guys, I know there's a few of you in the room. Just to get it off, there is a European bank holiday going on at the moment, and I think the markets are a bit quiet because of that. If you lot have noticed anything at the moment, the markets have continued to rally on. The dollars continue to be a little bit strong. Now, this is something that I think all you guys should be reading. On Bloomberg, about 10:30, 11:30, within that time, they release 5 things you need to know just before the US market open up. Now, this is quite good. It breaks down, basically gives you an idea of sentiment. Now, this is something that's good for you guys to read repetitively because it helps build what the fundamentals are doing or which way the fundamentals are moving. Now, looking through it at the moment, there's clearly a push up from the dollar. You've got a bit going on with Trump here, something to do with the aluminium steel, not really massive. This is the major thing I think everybody's talking about. Treasury yields. We spoke about this 2-3 days ago. They were up 3%. Yeah. Now, if you have a look at it, they're stating that the bond market can take a large supply of government debt. The supply can be seen in figures released by the Treasury Department that shows the quarter recording of 488 billion of net borrowing, and it's up 47 billion on previous estimate. That's where that yields come from. That's why the strong dollar's kicking in. It's fundamentally written here in the news for you. Yeah. Now, moving on from that, that's the major thing. That's what's driving the market at the moment. You can see it's clearly there. It's something which, if you were trading today, tomorrow, the day after, you need to be aware of the fact that the dollar's had huge extended gains. Make sense? Good. Now, on top of that, markets are reported to be a bit flat at the moment across the board. Obviously, we've got the European holiday as well because of May Day. We're going to be off on Monday as well, so do be wary of that. Bank holidays, just to give you guys a little bit of upset. On bank holidays, what happens is generally the banks aren't around, so liquidity is low. Yeah. So, for example's sake, if you're trading through bank holidays, be wary. Liquidity will be low. Positions will be a little bit choppy. You might get reversals. It's easier to move the markets with smaller accounts, if that makes sense. So, because there's no banks in the market, you're going to see that the liquidity is low and levels are a little bit choppy. So, be aware of that. But obviously, today we've got US session kicking off. That's maybe why. London Open's been working fantastically well across dollar yen, dollar Swiss, euro pound, and the majors at the moment. I'm seeing a lot of guys missing out on free volume. It's an easy way to guarantee yourself 5 to 10 lots consistently every single day. Some of you guys do it. You do it like second nature. I'm not picking on you guys. I'm picking on the guys that are picking the days they choose, picking the strategies that they choose. They're not getting a full consistent results because they're picking and choosing what they're doing. Make sense? Now, this is the other thing I want to talk to you about, guys. Yesterday, if you had a look at some of the news...
Just a comments on that, mate. Yeah, just with this morning, I was just a little bit nervous because there wasn't a lot of volatility, and when markets tend to drift it makes me nervous on London Open if there's not a lot of volume, not a lot of push, etc., because that can open you up, particularly if you're looking for a 5 pip stop behind. I don't like
No, no,
drifting
no.
London Opens.
Yeah, yes, Steve.
Yeah,
I'm not singling anyone out. Yeah, I'm just giving it
yeah, no.
to the general consensus to people. Don't forget, people watch the live rooms back. It's just I'm trying to get guys into a position where you can consistently turn the volume, so you can make money and we can make money. So don't ever think I'm
So
singling anybody out. And obviously, where you may have had a few days off, it does take a little bit of time to get back into the swing of things, if that makes sense. It's like anything. If you
yeah,
put it
yeah.
down for a few weeks, like just to play on that psychology side of it as well, because that's 90% of the game in regards to staying in the game long term. If your psychology is not right, or you're not looking at things from a perspective, but all I would say is never take any criticism directly. Just keep an open book, because what we're trying to do here is we're trying to embed you guys. We're trying to pass the skills that we have onto you guys. Now, some students pick it up a little bit better, but when you're a little bit more coachable and a little bit more transparent in regards to taking the information and applying it, that's when the best results come. We've proven that. There's one guy in the room that's doing phenomenally well at the moment. Ferenc is there. It's just about applying it, repeating the process. Yeah. And sometimes when you have a little bit of a break, it takes a little bit of time to just like blow out the cobwebs, if that makes sense. But Stephen, in regards to that, I think confidence comes with practice, and someone like yourself has shown phenomenal results in the past. So it's just a little bit now about repeating the performance, where so you're confident in your conviction, so you know you did it, so you can repeat it, and that just comes from practice. There's nothing else to do. It's like nobody's going to be a master of the markets within 2 months or 6 months. It takes a hell of a lot of time, and also sometimes you have to lose money, because that's the way you learn, if that makes sense. I've lost a hell of a lot of money just learning. There's a famous quote I've looked for. I didn't. I paid for lessons, if that makes sense. But moving on, this is the other thing I wanted
You
to.
just with just another comment on London Open, mate. Like just with the euro dollar,
Mhm.
it's just because it's manipulated. Sometimes best to
Stay away from it.
place your opens after. No, not at 6 in the morning. That place it closer to 8:30 when there's additional volume. But I mean, maybe something like dollar Swiss, you can place that at a 6 o'clock because
Yeah,
it tends to be cleaner. I
yeah.
don't know what. I was just thinking about that. Just
That's spot on. Let me
not
just
doing it
let,
directly at 6 in the morning.
Yeah, let me just hit that point for you. Yeah, you
Yeah.
see, euro dollar, it's got the biggest amount of liquidity, so it's the one that you can get in for 100,000 lots and get out with no problem, if that makes sense. Now, because of that, it's the one that's most readily traded. So sometimes it might break a little bit later, it might break a little bit earlier. You're spot on there. It's because of the liquidity pool in that individual currency. The most amount of manipulation will happen on euro dollar because it's the biggest pair. It's the one that the banks are comfortable to get in and out of. You're not going to see banks trading dollar NOK or pound CAD, for example. Does that make sense? But generally, the majors have liquidity across the board. But you are spot on there. Dollar Swiss, dollar yen, and euro pound, they work similarly. They're low levels of liquidity. They work quite clean. Euro dollar and cable are a little bit more manipulated. That's the only two contrasts in it, if that makes sense. You with me?
Yeah, I like cable on breakup because it actually it's spikier, etc. It moves
It
quicker, so you
moves.
can actually get a stop loss in place. Yeah,
You can get the stop loss in, and it triggers the trailing stop faster because it's got a bigger rate. It's got a wider range, daily range, so
agreed.
it's
Yeah,
more
yeah,
likely to take
that's the
the
thinking.
move. Now, looking at this, just going through the news as well, we will go through the charts on London Open as well. We'll look at that straight after the news. Earnings data. This is massive because if you were in the live room yesterday, there was a lot coming out about earnings. We saw Asda. I'm not sure if you guys have seen it. Asda have bought out Sainsbury's. That's massive. That's a Walmart company underpinning. That's quite big. You've got some stuff coming out. If you have looking at earnings is massive. It will implement stock markets. Don't forget, guys, if earnings come out very good and it pushes markets up, it will be weak correlation to markets, if that makes sense. So it's just something to be aware of because at the moment, a lot of the news in the media is about stocks and what's going on with the earnings, if that makes sense. So it's just something to be made aware of, if that makes sense. Obviously, we've got a little bit of news today. We got US just coming back to the economical calendar now. Just bear with me. Let me just get the information up. So yeah, today, obviously, the pound's broken down this morning off the back of that weak data. I'm sure you guys have seen that little sell-off towards the downside. I'm not too sure why this isn't loading up. Just bear with me. Yep, here it is. So looking at the data today, okay, you can see Tuesday we've got major bank holidays. You've got Europe, May Day, May Day, May Day. So liquidity today might be a little bit flat. Yeah, so you might see that, for example's sake, on London Open or being a little bit choppy. So be aware of that as well. Monday we've got a bank holiday as well, I think. So be aware of that. Now today, apart from that, we've got a little bit of news coming out from the US at 1:30. Nothing major. And then you've got this evening Bank of Canada speaking at 6:30. Be wary of that. That could move the market slightly across the board. Apart from that, you've got New Zealand dollar employment rate, like the preempted rate coming out. That's this evening. I know some of you guys do trade the New Zealand dollar. It moves quite well. It moves correlated with Aussie dollar and Aussie dollar and Euro dollar. So it's an easy pair to pick up a quick trade on. Tomorrow we've got GDP for Euro. That's quite major in the morning as well. That could invalidate London Opens or give you a bit more movement. So guys, tomorrow when you're trading, make sure you're aware that there's GDP coming out and it's expected at 0.4. So if it doesn't come out in line to that, you might see a bit of a bigger move. Might invalidate the London Open setups. Now guys, remember what I was talking about news. When the news comes out, look for orders where the market's been pushed in towards so that you can see exactly where it's picking up. Sometimes you'll see weak dollar off the news or weak euro and it's reversal on the chart. It's because the news has come out, the price has been pushed into key levels, and it's turning around. So be aware of that as well. I've started to teach you guys to read that. I remember we caught one CPI live last month and we saw that live. Non-farm payrolls, will go through it as well live on Friday. Tomorrow, okay guys, we've also got, it's quite a big news day tomorrow actually. We've got oil inventories and you've got a Fed rate decision. Yeah, probably going to be unchanged. But I think this, if it stays unchanged, it's probably going to bring the sentiment down on the dollar a little bit. So, because at the moment, if you can have a look at it, you can see the dollar's just charging on. Yeah, it's not massively extended in the last few days, but it's definitely giving it a go. Now you need some kind of news to come out to change the fundamentals in regard, just to get it to pull back, because right now you're getting a violent move one way. Yeah, this could be something that does that. I doubt they're going to rate they won't change the rate tomorrow. It's expected to stay the same. If they do something very unexpected, which I doubt, you might get a bigger move, but I think it will give a bit of a weak dollar and it will push it back down for it to find orders before it rallies on. At the moment, just so you guys are clear, the dollar's at the highest point since Trump came into power. It hasn't been this buoyant over the last 18 months. It's trading at the highest point. So just be aware of that, especially when you're looking at it. Obviously, you've got the Fed rate tomorrow as well. That's crucial. That could definitely give some pullback, if that makes sense. Then Thursday, you've still got stuff out, CPI from the euro. That's there as well. And you've got non-farm payrolls. Yeah, non-farm payrolls as well is quite big. On a Friday, it's definitely going to move the market. So we're expecting now, if you guys have noticed last few days, markets have been a little bit flat, a little bit choppy. I'm expecting them to pick up from tomorrow to see the moves start coming back on the table, guys. So I'm expecting liquidity to come back in. Yeah, non-farm payrolls is there, as you guys can see. So just be aware of that. So tomorrow, make sure you've got GDP in the morning from the euro. Today, you guys are spot on. I remember, Stephen, you just spoke about the fact that it felt a bit choppy, it felt a bit sideways. It's because of the May Day. Yeah, does that give you a bit of clarity there, Stephen? Yeah, that's why it's a little bit choppy. Now, bringing up the charts. Yeah. Let's go.
Yes, it did, man. I was considering not trading, but I love shorting cable at the moment because I think the data's all
good. Now, if you're having a look at it here, this euro dollar order above, order below, it would have triggered you on the sell. Yeah, would have probably have taken you out, but you definitely would have beaten the spread. Yeah. Dollar Swiss, that's clean. You definitely would have beat the spread there. You might have come back, taken you out on your trailing stop. Looking at the 5-day range, it probably would have, because your stop would have been a little bit, your trailing stop would have been tighter. Dollar yen, um, dollar yen's clean, guys. It didn't come back. It would have given you quite a bit there. It would have given you at least 6, 7 pips. I saw a few clients catch that before it came back.
On euro dollar, that's pretty much what I was saying, yeah, because it does the first touch, it pulls back, it can stop you out quite easily, and then it goes again. And cable can do exactly the same thing. They sometimes behave like that, where you kind of need to be around to
That's why you
re-enter
put the
or
trailing
reset.
stop. Yeah, but that's why you put the trailing stop. Don't forget, sometimes if you not
Yeah.
catching the interim move, it's about doing the volume of London Open, because you know you get a clean break. Does that make sense? So use
Mm-hmm.
that in the back of your mind as well, because it's there to give you the idea so you can do 10 to 20 trades a day consistently. Don't forget, at the moment you might be doing them at 1 lot, 5 lots, 10 lots, but one day you could do them at 20 lots, 25 lots. And that's the thing that all you guys need to understand, is that this is easily scalable. Once you've got the mechanics of doing 5 or 10 trades a day, you can do them at 2 lots or 5 lots. Realistically, guys should be targeting on a 10K account, you should be targeting 100 lots a day, $500 a day in rebate. That's what we're looking for. We're looking, guys, to basically consistently do 100 lots a day. 100 lots a day as a trader is not a big ask. If you went to a prop house, like I worked for Marex and prop houses, Bullmoose derivatives. I worked for a few of the prop shops in the city when I was learning to trade initially. Those guys expect you to do somewhere between 300 to 400 trades a day, and you're not allowed to hold any positions overnight. It's all about scaling in and scaling out. So in regards to that, doing 100 lots is a lot more. How should I put it? It's easier to do it over a longer period of time. That makes sense. It's easier for you guys to do 100 lots on a 10 or 20K account for 100 days. Whereas if you do 300 lots on a 10K account, you're eventually going to burn out the account unless you're growing it. And that's realistically what we want to get you guys into doing. We want to get you guys into preempting it, scaling up. Try not to stay on small accounts for too long. Yeah, I'll tell you why. It does two things. One, it breeds mistakes, because when you lose and you lose on a small amount, it doesn't mean anything. But when you lose on a bigger account and it's bigger or smaller amounts, it can hurt you. It can put you off. It can put you back into your shell. It can advance you into your shell, if that makes sense. That's why sometimes staying on smaller accounts for too long, once you've got confident or you've got understanding, scale it up, because you don't want to sit on the smaller accounts for too long. You want to actually profit. Some guys, what they do on a small account is they stay on it for too long. And sorry, in turn, what happens is you pick up bad habits that you don't understand, because when you lose, you lose something small, and when you win something that doesn't mean anything. So it's like you might be able to trade, but because you don't profit from the results or the losses, or it doesn't mean anything, you stay stuck at one place, because the emotional side of trading is the key part that you need to battle, especially as you get scale up account sizes. If you go into account sizes 5 or 10K, the emotions are completely different. If you trade a £500 account or a 10K account and make the same decisions, you might not get the same results, because of the emotion on the size of the account. That's why you guys need to get out into you need to be in a comfortable region when you're trading 5 or 10K. It needs to be done with comfortability. Even myself, when I scale up to like £500,000 or £1,000,000, my decisions are a lot different. Now, if the money is my own or the money is company funds or client funds, it's completely different as well, because you look at the markets differently. For example, after I lost a hell of a lot of money off Brexit, and we got a no vote, we got a clear decision that the market was going to go down because we had Brexit. So it was easier to get the clients in because you had no emotion. You were making the decision purely off the facts, if that makes sense. And that's something that you guys need to program yourself to, because you need to detach yourself from the money and the emotion from the money, because otherwise you're never going to make money. If you fall in love with a result, whether it be a loss or whether it be a win, you're never going to get to the top scale. It's like having an injury as a footballer and stop playing because you got a knee injury or because you got a back injury or hamstring injury. You're not going to stop playing football just because you had a setback, if that makes sense. It's how you get back from the setback that defines the traders at the highest levels. For example, Jesse Livermore, this guy became bankrupt multiple times. This guy was famous for shorting the bucket shops in the early 90s, like 1909. This guy was a billionaire from shorting the stock markets back then. The markets are a cycle. If you guys know anything, they're a way of transferring the money from the institutions, from the retailers to the institutions. So it's a long-term game. So the market always goes from the high to the low to the high to the low, because institutions buy at the low and they sell at the high. That's why you get a stock market cycle that lasts 5 to 10 years, where the market goes from the low to the high. Guess what? Institutions bought at the bottom, they sold at the high. They're not institutions. When they buy, they don't buy back at a medium price, they buy back at the low. That's why the markets bottom out. This time, because Trump came into power, the markets have continued to go 25%. We probably won't get a correction or crash back to zero, what we saw pre-Lehman Brothers. Now we'll probably get a crash back to after the Lehman Brothers crash, maybe, for example, 11,000 or 10,000 on the Dow. You will never get a correction back to zero, because there's too much money in the markets. There's too many companies. There's too much money that's been made. There's too much earning out there, if that makes sense. Now, coming to the charts, so looking at it, Euro Pound as well. Euro Pound's clean today, guys. What's happened here? It's definitely taking you out. That today across the board, even cable today worked phenomenally well. The risk reward on this type of thing is quite good. I know it's come back here, but it gave a lot of clients 1-to-1, and I know some clients loaded in on the hedge as well. I know there was a few clients that caught the hedge quite well this morning, so that's quite good. This is clean. There's 5 trades this morning. Everyone should have had a minimum of, let's just say, 10 lots or 20 lots banked this morning, depending on account size, just off the London Open. Now, if you're looking at it, coming to the afternoon play, yeah, coming to adding to the volume. Now, myself, I prefer just to use supply and demand. Yeah. Now, one thing you guys will find quite quickly, if you just follow supply and demand orders and take the entries inside the box with a 10 to 12 pip stop loss, mathematically, you'll find a lot of these trades hold up because they follow the order flow. Yeah, it's not a secret. It's not something that's undisguised. It's the fact. Now, if you guys are looking at it, one thing you guys can see, there's no red lines on my charts at the moment. Can you see that? There's hardly any. Guess what, guys? Market's moving fundamentally. You've got fundamentals playing. What's those fundamentals that are playing, guys? Strong dollar. Now, that's the fastest way for you as a trader to tell if the market's range bound or trending, with those 5-day support and resistance lines. If the market moves out of the 5 days, then you know the market's moving fundamentally. If not, it's moving range bound. That's the fastest way for you guys to indicate that. There's no other way. Nobody's got a crystal ball. Bloomberg don't have it. The banks don't have it. You have to foresee the fact. Nobody can tell me if the market's going to go up or down tomorrow. If you told me, for example, today that the market's going up, I'll tell you that you're lying, or you didn't know, because I know the fact that you can't guarantee the market to go up. The market's going to follow the orders. The market's an imbalance. It runs up, finds sellers. Runs down, finds buyers. Runs up, finds sellers. Now, as soon as there's an imbalance, you get a bigger move. Now, that's what the market's doing here. It's ranging, finding out whether the sellers are bigger than the buyers or the buyers are bigger than the sellers. Now, that's how the market moves generally. Yeah. Now, I just want to have a look at the dollar extent. Yeah. Because this is quite big, guys. This here, for a dollar move here, is massive. It's clean. It's one way. And it's quite a big move, nearly 300-400 pips in the last 10 days. This is that massive move. After it broke out from these levels, it's been clean. It's been just continuously going up. It's going to obviously have to run out of steam somewhere. It could be some news. The Fed rate decision, I think, could push it up or could push it down. It's not going to just continuously clean to go one way. That's a big move one way in regards to market conditions. These market conditions are perfect for hedging. You guys should be ripping the market apart if you're hedging at the moment, because you're getting the moves on the table. Yeah. But also, if you're only going with the fundamentals, you guys should have a high hit rate at the moment, because you understand the dollar's strong. So if the dollar's strong, obviously things like dollar Swiss, dollar yen's going to be extending. Now, you're going to be looking for zones where it's going to pull up. It is obviously eventually going to pull up somewhere, guys. It's not going to just continuously fly unless there was some big news like Brexit or something like that, which has clearly not come out. Only thing that's come out about the dollar is the treasury yields. That's why you've got this continuous gain. Yeah, that's a big gain, dollar yen across the board. Now, if you're looking at it, Euro dollar and dollar Swiss, guess what, guys? They're invertly correlated, so they move in opposite directions. Now, here was a key level. We spoke about this level the other day, um, where if the market was going to turn, it should have turned at that level. You've got a clear breakout from there. 150 pips, guys. When you get a breakout from that sort of level, you guys should be understanding the sell sides are better. That's why you should be cleaning up on London Open. This is what a lot of you guys are not taking into account. You've got all the information you need, you're just not applying it correctly. Since that breakout from thing, look how clean the downside breakouts are on London Open. They're clean, guys. Even if you're confident, when the market's moving fundamentally, if you're putting your targets in, they will be getting hit. This today's target here, I think 3 or 4 clients caught that clean. Some clients were unlucky because they wanted to put their stop. Once you catch 1-to-1, put your stop at 1-to-1 and just see if it goes. You'll catch these moves. That's how you grow the account. There's no other way to do it. You need to build up an infantry of trades where the markets are moving in your favor. That's how you catch them. Stops to break, and then you see if the market's going to run in your favor. Any type of sell at the moment that you're holding, you can just make money out of it. It's simple. The market is just trending down. It's just moving off a strong dollar. That's why euro's coming down. Now, I would be looking for levels. I think this extension down is overdue a pull-up. Even if they are selling it, it needs to come back to find orders. It's across the board. Here it is on cable. It's clean. It's come down. It's come all the way down. It's going to come into these levels to find orders, guys. It's giving you an indication of direction now. I personally think the market's going to be range bound between these levels. I thought it was 136, but I think it's got with the move and the force it's come down, it's got possibilities to come into these orders. If the move was a little bit more up and down, I'd say it would bounce from these levels. That's the type of thing you guys need to start incorporating into your development and understanding of the market, because you can see these last 2 weeks have been fundamentally, clearly driven fundamentally. So if you're using the rules properly, London Open, few supply and demand levels, that's consistent for you guys to easily do 5 to 10 trades a day. Irrelevant of trade size. If you're doing 10 lots, that's 100 lots. If that's consistent, that's easy work, guys. That's not hard work. That should be getting done consistently, especially now some of you guys that have been trading for 6 months. You guys should be doing the volume consistently, day in, day out. I say personally, once you've turned the volume for like 200 days, that your understanding and how confident you are with it and the practice that you put into it is phenomenal in regards to getting confident with it, guys. And that's what you guys need to start to get more, pay closer attention to detail. Yeah, so let's look at some smaller levels because they're crucial as well. Levels that you guys could be looking at today. Yeah, so we can see this market clearly trending down. Yeah, I wouldn't be falling in love with the buys. I'd be looking for second touches on the buys. I'll be looking for markets to come back up, and I'll be looking for sells on euro dollar and cable. I think it's been pushed a little bit down because of the news, so you could expect the US markets to come in and reverse it. If you see a reversal, so if you see, for example, that complete reversal of this push down, you know institutions have bought. So take that into account. Keep that in the back of your mind. Something to be wary of. Just to get a little bit of feedback, guys. Is it good? Information good? I know it's a little bit quiet. I just want a little bit of interaction. Are you guys good? Stephen, Jay? Yeah?
Yeah, I agree with you, man. It's just attention to detail, particularly early in the morning, just doing basic stuff like making sure you check the news, making sure you know where the swing levels are, making sure you know no levels are broken. I mean, yeah, like you said, it's just putting it all together.
That's it. Do you understand now when you're looking at it, how it's not something necessarily, when you put all the pieces together, you can get a high accuracy in it. Do you understand?
No, it's irritating when you don't do it. Mate,
yeah, it just comes with repetition. I'll be honest with you, it's practice makes perfect. The more and more you do it, the more and more confident you do it, the better you'll get at it. And really, once you've got the theory and the information, like if you're following the rules, like just as a little bit of a summary, yeah, sell high. Even if you're hedging, whatever you're doing, make sure you're selling high and you're buying low. If you're not doing that first rule, you're basically buying and selling in the wrong places. You'll never be in the markets long term because you'll just run out of luck. Yeah. Now, on top of that, you need to be managing the positions. Trailing stops, stops to break even. The trailing stops and the stops to break even, what they do is two things. One, they remove full emotion from the situation. So they allow you to manage the trades emotionless. Like you can go away, the trailing stops will take you out, they'll put you in, and they'll make sure that you're getting out as best as possible. Make sense? Now, when you move the stop losses to break even and cancel it, what you do is you find out for free whether your order had enough orders behind it. And realistically, if you look at it from that point of view, it's a lot more confident for you to get an inventory of positions where your stop losses are at break even. When they're at break even, it's easier for you to manage. When you're logging onto the PC, if you're logging on and you're seeing positions which are offside, 100, 200, 300 pounds, 400 pips, it puts you off. It makes it harder for you to manage. It puts you in a position where it's stressful. You'll be caught off guard. You'll be making indecisions. You'll be making wrong decisions, and that will tell in your decision making. If you're all flustered and all nervous and all unconfident in your decision making, it will come across in your P&L. You need to have that little bit of conviction. You need to be calm about it. You need to go through the process. You need to not fall in love with the result, and you need to keep going through the process till you see the results. If you follow the rules, the process will show up very, very quickly. And that's the point I'm trying to get across to everybody, is that some people at the moment are lacking the process, but as soon as they put themselves in line and start to follow it consistently, you guys will get to a high level very, very quickly. And that's the type of guys we're looking for. You've got to be risk averse. If you think you're going to make millions out of market and not take a few losses, you're living in la la land. It's never going to happen. Any trader that I know, especially people that were self-backed or made their own P&Ls or fell in love with the market like I did, have lost money. If they haven't, they're lying to you. The same way that we've won money. You can't, it's like you've got the good and the bad. You have to take the good with the bad. You're not going to get it good, 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 and you're not going to get it bad, bad, bad unless you don't follow the rules. If you don't follow the rules, what happens is you'll just donate your money to the market. It's like donation to charity. It's because your skills as a trader are at infant stages. If you're an infant, like just if you're a baby and you go into the big world's going to eat you alive. The same way as a trader, you need to come through the stages. It's like infancy, elementary, primary, high school, university, graduation. It's making you aware. As a trader, you need to be aware of market conditions, fundamentals, and you need to be on top of them. You need to keep yourself in the game. At the end of the day, if you could get free information to make yourself money, why wouldn't you read the information? If you log onto the charts and trade without watching the news, some people do, technical traders, some people do. But if you don't take into account the news, you'll never be consistent over a long period of time, because technicals are only going to play out so many times. The fundamentals are going to play out the rest of the time. That's why you take into account the crystal ball thing, where if I could tell you it's moving fundamentally or technically, nobody has that. All you can do is play on the pitch and see if it's going to rain or not. That's the best way to give you the analogy, or to sum it up for you guys. And that's what I need to get you guys implementing. If you can do 10, 20 trades a day, we can get you out to $5,000, $10,000 a month in rebate. That's the thing that you guys need to understand. It can put you in a situation where you're comfortable and you're financially free if you're consistent with it. So that's why it's worth the effort. That's why it's worth going through the emotions. But battling the emotions as you grow your account size is phenomenal. Most people fail because they give up too early. It's like you get 3 foot from gold. Most people get in the ring, they do all the hard work, they learn all the theory, and then when it comes to actually boxing, what happens is they take a punch, and then because it hurts, they don't want to box anymore. But you have to be able to take the hit in order to give the hit, if that makes sense. Otherwise, you're never going to have that risk appetite. It's like anything. If you don't have the risk averse to make money, you're never going to be able to lose money or make money. So let's go into some of the levels just to look at some key levels. Yeah. So at the moment, this is strong. I'm trying to get in on some of the buys. Probably won't get there, guys. Especially with the way that it's May Day bank holiday. You got US markets open. I'm expecting a good break from the US Open. I'm not going to mess around with you guys. Just because the market's a little bit thing. If we're going to see a change in fundamentals or a change in it, you're going to see it soon in the next few sessions. If you don't see a change and the dollar pull up, it's just going to continue going up till it finds orders. That's it. You can't buy this at the moment. You can't buy the dollar at the moment because it still looks a bit strong, if you ask me personally. The way it's moving down, the way it's stuck in these ranges, when it's stuck in these tight ranges, consolidation, that's not good news. It's just finding orders before it continues a retreat. Make sense? The moment it breaks out of these channels, it gives you indication either you're looking for a second touch. Leave the first touches. They get invalidated. You see, if it doesn't give you on the first touch, on the second touch, a lot of times it gets invalidated, guys. That's why you leave the first touch alone. But if you catch it like it has here, you can see it won't make a higher high. If these markets make a higher high, it will put me a little bit off. But let's see. No one's got a crystal ball, if that makes sense. Yeah. So just coming back, because I just want to get back into some of the news. Yeah. Apart from looking at that, market's a bit flat. There's not really much else out there. Let me just check BBC. BBC's a good one, guys. It puts it out there, everything quite quickly. So it's a good one to be looking at in regards to just letting you know if anything's moving the market. Yeah. So looking at the section, here's that pound news that pushes it below 137. Sterling tumbles to a 3.5-month low after disappointing manufacturing data. So it's there. Apart from that, you're getting a little bit more about the Sainsbury's price squeeze. I'm sure you guys have heard about TSB having a little bit of problems. There it is. Computer fiasco. WhatsApp boss to quit. Panasonic hit with a £280 million corporation fine. Really, the reason why the stocks are dominating the business field at the moment is because of the earnings season. If as a trader, especially because we're looking at FX, if you see strong earning figures, I'll be looking at weak currencies, but they do have a direct correlation, so just be aware of that. Apart from that, we've only got the things that we were talking about: Fed rate, oil inventories, and non-farm payrolls, economic data-wise. Oh yeah, don't forget we've got GDP as well tomorrow for the euro. Guys trading London Open, be aware of that. It could invalidate zones or it could push prices into levels which changes sentiment, so be aware of that. Let's just bring up the charts and let's look at a few levels that we're looking at today. Buying this, look, it's continuing, guys. If you have a look at it, euro dollar is clearly showing some push down. I'm expecting a little bit more of a continuation from the dollar then, just by how strong it looks. Euro dollar's continuing. Cables continue. It's free fall. I wouldn't try and catch that at the moment. You're just going to cut your hands, guys. So be wary of that. Be aware of the fact that it's just free falling through the floor. Yeah. Also, in regards to trade management, I'm seeing, like, this is crucial. I'm seeing a lot of execution error, guys. I'm seeing a lot of guys put orders in, miss trailing stops, miss stop losses, and then afterwards blame the fact that I forgot the trailing stop or you weren't precise in where the order was. I see somebody the other day put 3 orders in the same buy zone and all 3 got triggered. Luckily, the market continued in their favor, but it could have gone the other way and it could have had a massive hole in their account. That's attention to detail and attention to being precision. In trading, precision is very important because it can be the difference between a £5,000 loss and a £50,000 loss. Execution error is one of the most ways that I've seen a lot of guys lose a hell of a lot of money because they don't pay close attention to detail. If you don't pay close attention to detail, it can cost you on a big scale. On a smaller account, it can mean the difference between £5, £10 or £20. On a large account, it can hurt. It can set your emotion off. Now, this is the other thing I want to speak to you guys about is the fact what happens off the matter of fact. So if you do something and it puts you off, or you have a losing trade or you have a winning trade, don't fall in love with that result. It will make you emotionally involved with it. It will mean that you will make your next decision, whether you're feeling happy, whether you're feeling unhappy, whether you want to stop trading, whether you want to chase your losses. You shouldn't be getting yourselves into those type of mindsets because you're breeding yourself, or you're setting yourself up for failure, because eventually you'll get it wrong, or your mindset will kick in, or your emotions, and you thought, oh, the market moved in my favor. If my stop loss was there, I would have been right. That means that your entry wasn't right. If you're not selling high and buying low, you're never going to stand a chance to catch the longer term move because your entry is not in the right place. So that's something that you guys need to be made aware of. You need to be consistent about it. You need to keep it in the back burner. And realistically, if you're not taking into account where you're selling and buying, you're never going to do well in trading. That's the first rule. I've seen juniors time and time again buy on the high, sell on the low, and just end up offside and never understand why they make any lose money. It's because you're in the retail mindset. You're not following what the big money's doing. The big money will never buy at the high and sell at the low. You lose money. They sell at the low and they buy at the high. The same way the stock markets work. You buy at the low, you sell at the high. That's why the market goes to the high, to the low, to the high, to the low. Now, the one thing that I want to make all you guys aware of is the fact at the moment in a bull market, there's the least amount of volatility across all markets. All markets are connected, whether it be commodities, indices, stocks, or FX. What you guys need to know as people is the fact that in a falling market, the market falls 2 to 3 times more violently than in a rising market. So it falls in a 2 year period and it takes 6 to 8 years to rise. The volatility in a falling market is phenomenal. Anybody can be on the pitch and score the goal. That's the type of conditions we come back to. If we go into economical crash or recession, market conditions for day traders are going to be phenomenal. As day traders, you want to be trading through volatility, because if there's no volatility, there's no movement, there's no profit. Make sense? If there is volatility, this gives you opportunity to get in and out. That's the thing that you guys need to be made aware of as well. Once you guys start to get confident, start to look at the cross bets, start to look at things like pound, yen, Aussie dollar, they move a little bit better. They're a little bit less unforgiving. So don't trade them until you're confident with risk reward, how to take positions, where to take your profits. But do start to use some of the skills I've given you. The 5-day range, support and resistance, is crucial for trade management. If you guys aren't using that for your targets and your entries, when you're getting 2 to 3 ranges, so it's gone through 2 to 3 levels on a 5-day range, take the profits. You're taking 30% of the daily move. It's good money. You guys can't be holding for the big 1,000 pip move, 10,000 pip moves. That's a myth. Nobody got rich like that. If you make one money off one trade, it's about doing it day in, day out, consistently. And that's what I want you guys to start to getting into the consistency of, doing this day in, day out consistently. Now, trade management, this is the last thing I'm going to touch upon before we wrap up the room for today, is time. Yeah, if the market hasn't turned within a few 15-minute candles here like it hasn't done here, it's probably not going to do it. Don't fall in love with a level. Never ever fall in love with a position or a level, because what you do there is you're setting yourself up for failure, because it's likely that one level could be invalidated. Multiple levels, if they get invalidated, there's something wrong with the levels. If one level is likely to pierce or go through, I've seen it time again, like sometimes the level will just be pierced and then the price will reverse, but because of your entry, the price has gone the other way, and then it's too late, guys. You've lost, and you either in a sense of emotion where you're like, oh, I lost, I'm not sure why it happened, why it didn't work, and you put yourself into a situation where you're breeding yourself to be put off in regards to mindset. You're going to be like, oh, I thought the market was going to go in my favor, it didn't. You just want to be following the market. You want to be buying high, selling high, buying low, trade managing your way up, and allowing the market to tell you if your position was correct and there was orders behind your entry. That's it. There's nothing else to it. The market goes up because there's more buyers. The market goes down because there's more sellers. If you look at the market and you say, oh, why did it go up? It's simple. There was more buyers in these areas here. If the market comes down from these levels, you can see that there's more sellers here. If it continues to go up, you know that there was more buyers in these areas here. That's why you can't fall in love with the position on the interim, because you don't know where the buyers and sellers are going to be. Sometimes you might find a position where you get a good entry, but it reverts. That's what happens generally when the market's moving like it is fundamentally. You might catch an entry here, but the market follows through and takes you out for break even. But didn't you find out for free whether you're right or wrong? That's the main thing you guys need to all be implementing. I know a few of you guys come in and go out of the room during their lunchtime sessions, but you need to start to breed this. You need to start opening loads of positions, stop to break even, and seeing if they're going to grow the account. That's the only way to do it. There's no two ways about it. A lot of people ask me, how do you do it? How do you grow accounts? How do you make money out of the markets? If you guys have been watching the live room videos and staying tuned to it, I'm giving you guys the information to now building on it is what you do with it. I can give it to a lot of people. Some people take it and apply it. Some people take it, think they know better and try and adopt it. Some people look at it and they're like they're too smart for it. Follow the information, follow the rules. That's how you're going to get to profitability sooner rather than later. Yeah, so let's just look at a few levels. Obviously, sterling's free falling at the moment. Sterling and euro are free falling. This is clearly a continuation of the dollar. So be aware of that, guys. We're waiting for some news to come out, probably to pull it back a little bit. But really, that's the summary we're looking. We're looking to continue this dollar rise. Anything that we're going against the dollar, be tight with trade management. Take profits that are on the table. Don't leave anything on the table that's going short dollar. And don't fall in love with it because it could invalidate quite quickly. Right, guys, to wrap it up, if you guys got any questions, any queries, is that good what we've gone through today? Is that helping, working on fundamentals and the strategies, planning you guys to get to the end goal? Is that good, Ferenc, Stephen?
Yeah, it's good. It's good to hear all those things that are important over and over again, because this is how it actually goes into my mind.
That's it. It's about repetition. I didn't pick the rules up, but without repeating it time and time again for a few years. So if I go through with you guys as students continuously and repetitively for 6 to 12 months, by the end it will be embedded in your nature. It's like the neurogymnastics planning in your brain. We're trying to plan the pathway so that you can continue. Some of the rules, if you don't follow them, you'll never be profitable in the market. The fourth rule, which is crucial as well, if you only hold positions where your stops are at break even, that is the major point to staying in the market for 100 days or 200 days. If you start to hold positions which are offside, it's way too stressful to manage. Every time you log into your MT4 or on your phone, you're managing a position 100 pips offside. It's stressful. That's not how big traders do it. Traders that make big money manage positions which are onside. That's the only way to do it. You need confirmation that the market's moving in your favor. That fourth and fifth rule are crucial. You can't hold positions which you don't have your stop losses at break even. If you keep getting in the market and can't get your stop loss to break even, you need to work on entry. You need to work on selling high and buying low. Once you start to see the sell high and buy low, don't get me wrong, sometimes it gets invalidated if the market's moving fundamentally, but if you're aware of it, you can position yourself and you can go with it. If you didn't catch any of this dollar move over the last 2 weeks, 3 weeks, there's no point of trading because it's just clean one way. Even whether you're hedging or whether you're trading outright, it's easy. It's good market conditions. I think we're going to see a little bit of a pullback now over the next few weeks, 10 days. But let's see. It's data dependent. If the non-farm payroll comes out fully obscured and it gives a strong dollar, you could see a push up. But if it comes out in line, I think it could start to pull back. So you've got to take everything into account, people by people, data by data, if that makes sense. Yeah. Great, guys. Stephen, good.
Yeah, I mean, it's just you looking back over the past few months, it's just been the small execution errors which have been the difference between making a shitload of money and being stopped at a break even. You know, not. I mean, I had a sell trade on cable at 1.43094, and my trading stop was too close. I was just looking at the 600 pip move and thinking, oh my fucking god, yeah. So I mean, it's just. it's just getting those small things into place, so that, like you say, you know, you can take those small hits, ding 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 ding, but you need to get that big win, and then it can reverse absolutely everything. So
it's not necessarily big win; it's the big move.
Well, no,
yeah,
the big, I should say, the big move. Yeah, like just
yes,
making sure
that's
the
it.
small things are in place.
Yes,
yeah,
exactly
so
that.
You can catch the big move. Yeah.
But now with your level and the confidence that you've come up to now, I expect to see that in the next few weeks and months. I expect to see some big moves where you've caught maybe, because now that we're playing on the fundamentals so thoroughly, every time we come into the library, I spend 30 minutes playing on it. So it's in the back of your guys' heads. It's there. It's getting embedded in there. Reading the news, people underestimate it, but you should read the news every single day before you trade as a trader, because if you're not up to date with what's going on in the world, how can you make decisions about what's going on with one of the biggest markets? Currency markets are the biggest one. Everybody trades currency, whether you're a car dealer, whether you buy goods, whatever it is, you trade currency. It's the biggest thing that's traded. It's the most readily traded thing. That's why we focus on it, because when we get to larger accounts, we can get in and out of it more consistently. Whereas if you go and trade a stock that's illiquid and you dump a million lots on or a million shares on there, you're going to pull the price down. And that's why I think the currency markets are a lot more flexible, especially with the fact that they generally always come back. But let's wrap it up for today anyway, guys. I'm good with the progress. Some guys are showing good results. Let's charge on through. A lot of the invoices have been settled now. So happy trading, happy May Day. Let's wrap it up and happy trading, guys.
Thank you.